fish every year is about $1.2 billion equivalent every year. That is just fishing. We're not talking about oil and mining and minerals as yet. So natural resources do have the capacity. But when we think natural resources, I'd like to challenge you to start with this simple schematic. What's the gross amount we're going to get from the natural resources? That's the quantity we produce multiplied by the world price. And then we have to back out the costs of production. For many of the investments, they're true greenfield investments. There's nothing. Companies coming in have to build the roads, provide water, provide electricity. Those are all costs. You net those out, and then you multiply it by factors, tariffs, taxes, etc. What accrues to the government from natural resources is not how much oil you sell or how much cocoa you sell. It's the taxes, royalties, and fees that you can collect. And in thinking through this dynamic, there are two things, there are many things we can talk about, but two I'd like to emphasize. One is corruption, which increases costs and reduces efficiencies. And the second is contracting, which also increases costs, increases one-sided risk, and it makes it more difficult for countries to be able to realize the totality of the resource envelope that should accrue from natural resources. This is from the Natural Resource Governance Index. It shows the difference between the legal frameworks that exist and the application of the legal frameworks in Africa. You can see that most of the continent is red. Is because the difference between the index of the actual laws and the application of the laws, there's a big gap. And so accountability, institutional resilience, and governance are important to ensure that that gap is closed, because many African countries already have the laws on the books to be able to do this. What about illicit financial flows? We've talked a lot about them. There are 4 ways these financial flows leave the continent. One is through straight theft. People just stealing the money and it leaves the continent. Second is through bad trade practices. Misinvoicing, non-invoicing, etc. Third is through money laundering. And the fourth is through bad industry practices like transfer pricing, which in itself is not illegal, but it's used in a way that actually filters most of the profits that investors make on the continent outside the continent, so we cannot tax them. That's what transfer pricing is all about. Illicit financing flows at the moment, there's a huge debate about how much leaves the continent. This chart shows the estimates from different researchers at different times, and it shows over time. Okay, the high side is about $120 billion a year. I think that's a little high. On the low side, we're hearing now about 50, 60 billion. Even if you take the low side, $60 billion leaving the continent every year is equivalent to how much the continent gets from aid. So an Africa beyond aid is not just improved natural resource governance, but we have to plug the holes that facilitate IFF across in our various countries. Then we had a bit of a conversation about it this morning, but I just wanted to highlight this. 12 African countries have sovereign wealth funds. These are funds that are set aside from natural resource exploitation for the benefit of the country. And you can see how much these funds are in billions of US dollars per country. Of the 12 countries, 5 of them, they don't have mandates. They are not allowed to invest in their own countries. They're not allowed to invest in their own countries. And of the 7 who are allowed to invest in their own countries, only 4 have invested in their own countries. The good news is that 3 have made a big step and they've done sub-regional and regional projects. But if you think about the amount of money under investment by just the sovereign wealth funds, we're not talking about the pension funds, we're not talking about other investments. Think about what this could do to plug a lot of the holes relating to SME financing and SME funding. Huge. In addition, if you look at commercial banks across Africa, you look at their assets, how much they have in cash. Commercial banks in Africa are excessively liquid. What that means is they're holding more cash than they need to. And most of the investments they do are in treasury bonds and treasury bills, which return, but does not invest in the entrepreneurial capacity of the country. Commercial banks in Africa, in their essential DNA, has to change to support the sort of things we are talking about here. Because if you look at liquidity in this country, in Ghana, PricewaterhouseCoopers did a banking survey last year, and of the about 62% of the assets are just liquid cash lying around. And why is that money not being plowed in? Why don't we have frameworks to think about creative ways to facilitate this? Last thing I want to mention is how do we leverage corporate social responsibility and philanthropy? These are 2 areas where Africa's money could be a catalyst and play a multiplier effect. Because if you are putting your own money forth, then others could come and supplement so you could scale up. We have just a few examples of corporate social responsibility. I could fill 2 or 3 slides full of this and look at all the African foundations. I could fill another 2 slides full of these. Where do we have the capacity to marshal and coordinate all of this so that all of the resources that are potentially available are being channeled towards financing development so that an Africa beyond aid is not just an Africa scrambling for money, but an Africa that is strategically coordinating the best of its resources. So, what do I think we should do? I think first we should accelerate financial sector innovation. The banking system has to be made to work for Africa's development. At the moment, the banking system is working fine, but not for Africa's development. We need to have different instruments. We also need to leverage technology to be able to do this. Secondly, I think we need to map and coordinate financing opportunities. The African Business Map is an excellent step in this direction. I think a challenge now is for all of us to contribute to crowdsource information so that we have a really comprehensive picture, so that we could start connecting the dots and connecting funds with entrepreneurial opportunities. Third, I think we need a more targeted focus on governance of Africa's financial system. And then we look at smart aid. Aid still has a role to play, but aid has to play a complementary role. It has to complement the efforts and this calls for important strategy. Let me close with a quote from Nelson Mandela. It always seems impossible until it's done. Thank you.
Thank you, Dr. Gilpin, for your scene set and really trying to help us connect the dots between the resources available and how we should really be trying to access them in a future beyond aid. I'd now like to call our panelists to join Dr. Gilpin to the stage. Mr. Atto Jay-Z, Senior Director for Investments for Africa Finance Corporation. Her Excellency Ambassador Josefa Leonel Correa Sacco. Adamasu Tadese, President and CEO of the Trade and Development Bank. Tigui Danke Kamara, CEO of Tigui Mining Group and Kamara Diamond and Gold Trading Network. His Excellency Dr. Edward Hinga Sandy. And His Excellency Cesar A. Mba Abogo, Minister of Finance, Economy and Planning at the Republic of Equatorial Guinea. So Dr. Gilpin was kind enough to really lay out some of the roadmap for us. I would like to start with Ambassador Sacco. The African Union's Agenda 2063 is described as Africa's blueprint and master plan for transforming Africa into the global powerhouse of the future. And the continent's strategic framework aims to deliver on its goal for inclusive and sustainable development. How does reducing aid dependency factor into these goals?
Thank you very much. Good morning, every one of you. I stand here on behalf of the chairperson of the African Union Commission, who attaches a great importance in these events, and mostly the thematic choosing the development behind aid. So he told me to come and represent him and represent the Commission in this important dialogue. Thank you, the organizer, for inviting the African Union Commission. As you know, the continent has got its own program, its blueprint, as you said, which is Agenda 2063. So Agenda 2063 is a demand-driven agenda. It was built by Africans for the Africans. They took time to really have a bold macro agenda so that all the aspects concerning our continent on the structural transformation is being taken by the Agenda 2063. Many of us will say, why 63? But we need to build this continent. Since morning, we've been listening that the potential of this continent is so important, mostly the natural resources. So we need to unlock this potential and leave our population, from poverty. Poverty is not sin from any human being. That is why this agenda has to be implemented. And the implementation should start, as the previous presenter said, the moderator, it has to start from raising the domestic resources. We are not beggars. We need to take our own ownership of our own program and build on that. So if we continue going by aids for 4 or 5 decades, the continent is not improving. So we need to change the narrative. So I really commend the UNDP for this initiative, and at the African Union, we will take it up, all the recommendations, so that we can really implement and go through the thematic choosing here, the development behind the aid. because we don't need AIDS. Africa has a lot, to take its own destiny. I thank you.
Now, I do want to turn to Mr. Tadesse, because your 2017 paper entitled Financing Africa's Future with a Collective, Not a National Approach. How do you shift that mindset, and how does the collective approach improve self-reliance on the continent? Mr. Tadesse.
Good afternoon, and thank you for the question. TDB is a specialized regional financial institution, so we were always set up to be collective and to be regional in nature. There's quite a few of these types of institutions these days, so I think the continent is better endowed, if I may say. And in fact, if you were to go back 20 years and ask yourself how many of these collective type financial institutions did you have vis-a-vis today, I think we would all be smiling. I'm sure many people know EcoBank. We had AfriExim this morning. AFC's on the panel. Ourselves. There's actually quite a list of us who've really come of age just in the past 10, 15 years. So there has been a sea change. African money has started to grow very nicely. Of course, this is just the beginning. A lot more needs to happen. One of the challenges, of course, of continuing to grow African money so that it can not just do what we would all like it to do, but for African money also to be a better catalyst. I think when we talk about going beyond aid, the issue is not just moving away from dependence on donor funding, but it's also about using smart African commercial money to bring in more FDI into the continent. For those who've watched the East Asian miracle over the years, what started that whole revolution was Asian money. Chinese money started that whole process. It's with the success of Chinese money that global capital started to come in and double down on the successes that they were seeing Chinese money actually having. So I think we are on a good path right now, but obviously there's a lot of demand and there isn't enough supply. And I think the one point that's not often acknowledged enough is the problem of savings, right? Because unfortunately we live in a finite world, and you can only have investable surplus where you have savings. If some of you recall the debates at the turn of the millennium, where we're trying to bring the growth agenda back to Africa after 2 lost decades, the big issue was, how do we get investment levels up? And for those of you who don't remember, investment levels were way below 20% of GDP. Today, the average is about 25%, and there's a handful of countries that are about 30%. The success of the Asian tigers was investment levels above 40%. So we're moving nicely. The 25% today that we have actually was the rallying call of the African Union of NEPAD at the turn of the millennium. I'll never forget how everybody was saying, the hurdle is 25%. How do we get Africa to get investment levels to 25%? We forget. Today we're actually at 25%. That's the average. But it's not enough. And the reality is that 25% is just an average. So if you were actually to unbundle it, you'll see that it's very uneven, the continental landscape, and you have several countries that are saving fairly well, and quite a lot that are still not saving enough. And so the thing is, when you talk about African money, it has to come from somewhere, and it has to come from savings. And so for us at TDB, what we've managed to do is, of course, reach out across 20 different countries. We have about 22 countries in which we work at the moment, and we're able to actually reach across borders and target surplus pools and bring it into the mix and actually allow surplus capital to do what it was always intended, even at the global level. As we all know, global capital is very liquid right now. There's so much. Actually, the number I saw last month, $17 trillion earning negative yields. People here wouldn't understand what it means to have a negative yield. Most of you are used to having some kind of positive interest rate on your accounts. Imagine $17 trillion earning negative yield. So the world is awash with capital and liquidity, the same way our African banks are on the local currency side. So there is a huge problem within the world of global capital, whether it's African or non-African. It's not flowing. And the reason it's not flowing is because incentives are not right, and there's a huge problem of confidence and trust. Now, something that people always tell me when I go to raise money is they say to me, what's your rating? What's your track record? These are the two key questions you have to always answer. If you're lucky enough to be able to have answers to those two questions, you can raise money like nobody's business. And that's why my bonds globally that I've been issuing over the past 5 years, always oversubscribed. Try to raise $500 million, I'm offered $2-3 billion. And you're in a position where you can actually say, no, thank you. But of course, we're a dollar bank, right? And as a dollar bank, you're raising dollar capital, and you have to sort of go to those sources. We're different from the typical commercial banks because they're local currency players. But what we've discovered is that there's a lot of African capital overseas. How do we actually get that money to work? And the funny thing, I just need to share this with you, is I remember going on my first roadshow about 6 years when we were doing our major capital raising in London. And I went to do a roadshow, and out of the Europeans in front of me, there were about 5 Africans, including a Ghanaian investor. And over the coffee session, I asked the Ghanaian investor, I said, how come you're meeting me here in Europe? Why don't you invest in me in Africa? He says, well, I feel more comfortable listening to your story here and seeing how serious you are and seeing how the due diligence has been done, the institutional aspects, right? And so the issue of confidence is very real. And of course, one doesn't want to be too critical because we know that money is not there to be lost, right? Money is there to be invested and to be in a position to give returns. So we have been working very hard at addressing this mindset issue from a different angle. How do you build confidence? How do you build trust? We sought out to raise $100 million of equity capital for our bank about 6 years ago. And initially, the thinking was we were going to go overseas, because typically that's where you always think you can get dollars. Now, the funny thing is we went on road shows within Africa, and we raised almost all the $100 million within Africa. We didn't think it would happen. And I had pension funds from Mauritius, from Seychelles, from Uganda, from Rwanda, putting their hands up saying, hey, I'm going to write you a check for $20 million. But to get there, we had to do a lot of hard work to build up that confidence and that trust. Today, of course, we issue dividends, and that's another thing that I just like to highlight is if you want African money to work, you have to treat it right. Again, it's a mindset issue, but it's a behavioral issue, right? Because the thing is, capital, whether it's human capital or financial capital, they both have wings. They will fly the minute you mistreat them. So there shouldn't be a misunderstanding of African capital being necessarily more patient than global capital. Capital is capital. It needs to be rewarded. If it's commercial in nature, that's how it is. If it's foundation money, if it's donor money, whether it's from an African foundation or a global foundation, it's designed for a different purpose. But if we're talking about economic growth-related investments, it's commercial. It's return-seeking capital. You've got to treat it right. And what we've discovered is there is actually a gap there for good African financial institutions to actually tap African capital in a way that it's not really been tapped. Dr. Arama this morning talked about central banks having $400 billion outside the continent. There's regulatory issues, the IMF, the BIS in Switzerland, they have rules around how central bank reserves can be managed, so it's a complex discussion. But there's African institutional investors, pension funds, insurance companies, all of these guys that have today almost $1.7 trillion, and most of that is invested outside. And it's in dollars, it's not local currency. So how do we actually tap African capital? And I think this is where the regional collective vehicles like us can actually keep telling the story, building the confidence, applying that really tough discipline internally to actually build the confidence. And ratings is part of it, making sure you don't have scandals, making sure that people behave right internally, because there's no secrets. People know when an institution is sick. And people may not talk about it, but they just won't put their money with you. So I think the mindset issue goes to behavior as well. And I think if we're serious, we can go quite far. Today, I'm sitting with $6 billion assets under management. 6 years ago, it was $1 billion. I've added $1 billion every single year. We've been so impressed at how African capital has been willing to come to our balance sheet. And this year, we issued a record dividend of $85 million for the first time in our history. And our African shareholders were so pleased. And we know that they get negative yields in the rest of the world. So if you can show them the money, then they will give you the money.
And in talking about that mindset and also really instilling confidence in the systems across Africa, I want now to bring in Mr. JC, because I know that you've structured a number of noteworthy deals across the continent, from Azura IPP in Nigeria, SenPower IPP in Ghana, and Eskom Kusile Power Plant in South Africa, just to name a few. So what sort of policies or business environments tend to allow those types of deals to become a reality?
Look at projects in the natural resources space, which is oil and gas and mining, power, transportation, logistics, and heavy industries and telecommunications. I think today we are very proud of the fact that we are the second highest rated institution in Africa at A3, which is really high. And I think some of the elements that ASEA has talked to is, what it does do is allow us to raise money pretty competitively, pretty long term, but invariably you do have to go outside to get that money raised. When you list those projects, and every time I chat to, people trying to borrow, the issue with Africa is not a shortage of money as we see it today. The issue is actually shortage of projects that are in a state that can be banked. Again, earlier this morning, I think it was the CEO of Afriexim who was saying that the challenge with Africa is just the lack of information. And when the information is available, it can be banked. You mentioned SenPower. SenPower closed about 4 or 5 years ago. SenPower raised $1 billion, of which about 70% came from Africa. Not only did 70% of that come from Africa, but it was all long-term funding in the region of 12 to 15 years. Almost never heard of in this region. And since then, that's been built on multiple times. You mentioned Azura, again, something very similar. And there's no rocket science to this, I keep saying. You've mentioned the fact that money chooses the path of least resistance. And when you put the basic elements in place to get money, you will find money. One of the things that tends to be a little bit scary in Africa is we talk about regulatory risk and just how fluid the system changes. When someone wants to put in 12-year money into a project, I think it's only reasonable to expect that they have 12-year visibility on the transaction. And yet what you see is once you lend money, that's pretty much the end of it. The world changes. There are 2 really large transactions I've been on, and it really fascinates me. I won't mention them. Again, both of them, each north of $1 billion, each one of them. And 1 or 2 years after those deals close, when you go into the government departments to speak to the same people who were involved in the deals, they don't have 1 copy of a single project document. All right, now, so you've entered into 12-year contractual relationships, and a year later, you've got no idea what you've agreed to. That does not instill confidence. That scares money, right? So for me, there is really no rocket science to this. Let's do the simple things. Let's get regulatory conditions correct. Earlier today, we talked about human resources. There's a lot of human resource capability. People know the right thing to do. Sometimes we just don't do the right things. And that's basically it. So again, just to reiterate, there is capital available in Africa. As AFC, we are looking to grow our balance sheet incredibly quickly. We hope to double our balance sheet in the next 4 or 5 years. And we are eager to support African projects out there. Thank you.
Now, Ms. Kamara, women are often left out of the conversation when it comes to solutions But then there are business leaders like yourself who recognize why including women can really promote economic development and a path out of poverty on the continent. Talk about how you were able to do that and whether your approach can be replicated.
Thank you very much. Thank you, everyone, for having me here. Thank you, UNDP, for giving us this opportunity. Thank you to the organizers. That's a very good question, because I was listening to the peers, the finances, and everything. And then one thing I'll keep on saying, yeah, but how women will get access to all the things that have been said here. And it has always been a challenge about women getting funding. So what we do, we try to figure out our own ways about getting finances. So that's what I did. So today I have a business that is worth now 60 million. And then all that without funding from banks. Just playing around with my own money. Investing, whatever I get, I put it back again into my own businesses. So I started with mining. Today, I have a holding that caters to 11 economical factors into Africa's development, because my goal is to push other women to go into entrepreneurship. It doesn't matter how, you have to be creative. If you cannot get the funding the right way, but we have traditional ways in Africa to fund our businesses. Like in my country, we call that susu. You know, so it's like you have a groupment of women that put the money together, and then afterwards, this month we give it to this woman and that. That's not what I did. I did by myself though. So every time I invested in my business and I'm able to raise, to be successful into the program, I would decide what's the next step. So meaning that we could still make business for women without the traditional, the banks. So banks, this is the challenge we are giving you guys. So women, we're saying, either you try to create a financial system that will cater to our needs, because we have the traditional ways where women do not get inheritance. So how do you want to push women into becoming more entrepreneurs when we don't get access to the funding? So if you let women like me continue doing what I'm doing, I think your banking system will start having flows, because we will not be coming back to you. So that's one thing. So another one is like, when women are doing business, we are first of all mothers, we are sisters. Women hold the families in Africa, tradition. So we shouldn't forget that. So when women have a business going, she's not thinking only about herself, but she's thinking about her community. So giving back. For me, corporate social responsibility is very important. So how do I go about that? I do also agriculture. So through my mining activities, we are side by side with rural women, rural communities. So thinking about handout. If you want to help these people, it's not just coming and saying, okay, here we're going to give them free this, free that. But you have to make them more responsible. How do I do that? These women do a lot of agriculture. So I come to them, I brainstorm, and I try to be more like a partner to them instead of someone who will be giving, handouts. So I will find out about their real needs. They need material. Some of them need like basic things that I will bring, but I will be like, okay, we will be like equal partners. This is not a handout. So you have the land, I will bring the money, sometimes the technical know-how, and together we'll create something. And it is working, because doing so will create local content. These women will be able to be more financially independent and be able to help their children. So that's something that I've been doing. I think also for Africans to be able to develop Africa, we need strong governance. We need good leadership. We need, laws that will allow us to actually be able to do business the right way, in a transparent way. Because when we go as investors overseas trying to get money, obviously that's not my case, but I'm talking about everybody else. They said, oh, the countries are not stable. There's war, there is this. or corruption. So our government needs to put regulations in place that will, first of all, push local entrepreneurship. Before bringing everybody in, they are coming anyway because Africa is the future, you know? So we need our government to create a system, some type of law that will push local investors so that the money will stay in Africa. That goes to what we are talking about today. So push local investors, try to get funding. Those are for the bankers. How would you help local investors? You know that we don't have most of the time all the money that the international investors have. You have a young guy, he has a great idea, but no funding. Sometimes he doesn't even know how to put together a business plan. But yet, you need all that. So how do you help these young people become African entrepreneurs so we could start keeping more of the investment in Africa? So that's my question to my friends. So basically that is, as women, we want to see more women entrepreneurs. So I will tell women not to be scared to get into entrepreneurship. We've been doing it for many, many years. When you go to the markets, you'll see that a lot of women have been doing it, but that's the informal. We need to start being more formal. So if you get the example in America, they have this system, the SBA, that is in place. They will hire a retiree, experts. They're no longer working, but they will give their services for free, about helping people set up the businesses. They will take you from A, B, C, till you get to where you want to be. So I am one of the fruits from that program in the US. I used to go back there and knock and ask them, how do I go? Like, I have ambitions, I want to do business, but I don't have all the technical know-hows, and they were able to guide me. So imagine if the African governments put systems like that in place, we would be able to create more entrepreneurs. I will stop there for now. Thank you.
And you raised some interesting points about really sort of establishing the stepping stones for people to be able to access this financing. And as we are now in the middle of the fourth industrial revolution, things are really speeding up. You don't want the continent to get left behind. That Minister Obogo, you talked about closing the digital gap. How important is that, especially in this day and age when it comes to accessing financing and really preparing the youth of Africa for the future?
Well, thank you very much for the question. First of all, I have to say thank you to UNDP for this dialogue. I think Chief Economist Raymond has set the tone of this conversation in the best way possible. I believe, first I will, because I like everything he said and I wanted to make a brief point. I think Chief Economist Raymond framed the conversation in the best way possible because the issue of the aid, which we are dealing with here, it's very complex. It's very complex, and in the case of Equatorial Guinea, while I was listening to him, I was thinking of Equatorial Guinea and all we've gone through. And when we talk about aid, in the specific case of Equatorial Guinea, when we got the independence in 1968, as many other African countries, my country reached to several agreements with the former colonial power. And this agreement, for whatever reason, they did not work very well. And right after 3 years, the Equatorial Guinea government at that time and the former colonial power, they broke up relations. And the government didn't get the aid it needed to run the state. And the whole country collapsed. So I'm saying that because the aid yesterday, in the morning of our independence, it was needed. Today, we still need the aid, yes, but what about tomorrow? The question is, what about tomorrow? And the way I deal with this question is basically in a very schematic way. We have to respond about how we're gonna graduate from the 8 and when are we gonna graduate from the 8. So I thank you very much for the presentation you've made. I have an issue with some data from Equatorial Guinea which is not exactly correct, but I will have an opportunity to discuss about that. Now, going to your specific question, I think the bankers have made very good points, which I share, but I have to say I'm with my brave sister when she said to the bankers that you have to come up with, let's say, innovative solution to support us. Because one of the problems we face in Africa is that with the bankers, we are in a different situation. We face different challenges. We know them very well. And we cannot pretend to do things in the same way they do it in other areas of the world, because we face different problems. I know the Susu in Equatorial Guinea, we call it Jange. And we've tried with different banks to engage them, to push them, to support this kind of solution. But at the end of the day, the mindset of the banks are not prepared for that. Even though they operate in Africa, even though they are working to overcome our challenges, they are not prepared for that. They have an excess of liquidity, but they don't have the ability to prepare product and services tailored to the need of the population. So I'm sending the stone back to you, bankers. I think one of the things you have to do is to get your feet in the ground of Africa and really find solution for our people. Because I think our people are entrepreneurs, they are brave, they are willing to move forward, and the bankers they have to work with them. Because at this point, for me at least, from the Equatorial Guinea perspective, we have a disconnection between the activity of the bankers and the demands of the population. So we have to close this gap. How do we close this gap? I think by using innovative solution, introducing innovative solution that can help. We have a lot of people, a lot of young guys in Africa and out of Africa who are willing to support their countries, the development of their state, but they don't have the tools and the means to really do that. So that's, for me, it is why technology, why the fourth industrial revolution and all the benefits that can bring to Africa is so important. A couple of weeks ago, we hosted a conversation in Equatorial Guinea with UNECA, which was to address this issue. And today in Equatorial Guinea, we are trying to create different associations, different institutions to really, really close the digital gap. We've invested a lot, the state, in numeric infrastructure, but that is not enough. You can put money in infrastructure, you can do this, you can do that, but you have to create an ecosystem. The point is, how do we create this ecosystem? What is the role of the public administration in secure the growing and the development of this ecosystem? And this is one of my challenges. This is the challenges I face in Equatorial Guinea. Now, I would like to also talk a little bit about the issue of money. Capital is capital. Capital needs confidence. Capital needs trust. This is something we all have to pay attention on carefully. I mean, from the government, because we want the engagement of private sector, but we need to understand very well what the private sector needs. The private sector needs confidence. The capital needs confidence, needs trust. One of the things I'm very worried about in Equatorial Guinea and in my sub-region is the doing business report, how we look in the doing business report. One of the things also I really care about is the competitiveness of our economy. And I think going back to the 8, the way Raymond framed the conversation, 8 has to see with, I mean, we always focus on the fiscal side, but then there's a financial component, then there's a structural component, then there is intellectual component. We have to deal with all these dimensions in a very complex way. Now, when we speak about doing business, when we speak about competitiveness of the economy and all the conditionality that comes with that, we tend to think that it's foreigner that they are saying that. They are saying something different than us. But the truth is that we have to own all this concept. We have to own all this concept and make it a reality in Africa, in our countries. Because private sector, it doesn't matter if they come from Europe or South Africa or Botswana, they need a very good business environment. They need an economy that is competitive. So me as a Minister of Finance, I'm dealing with all these kind of issue. And I focus mainly on how to make sure that we can enhance our ability to mobilize domestic resources and create the best condition for private sector. And I think with that, I can stop here and take to another one.
I do want to give the closing question to you, Minister Sandy. We know that Sierra Leone is a country that is highly dependent on aid. And in 2004, the country teamed up with the UNDP and several other organizations to create a central hub for aid coordination and management, DACO, the DACO office. But since its inception, what difference has this made in terms of Sierra Leone's dynamic with aid, and where do they go from there?
Thank you very much. What we have realized from that intervention, first let me thank the UNDP for initiating this kind of dialogue, and we look forward to more strategic dialogue, particularly those involving presidents, heads of government in Africa, so that we can actually sit down and have this kind of conversation going between the public and the private sector, and see what we can do to start thinking about how we take aid away. I mean, the intervention there was a way of helping Sierra Leone struggling after coming from war, coming from Ebola, and the donor sector was kind of in disarray. There were so many scattered issues that government was not able to, needed some coordination around. So partnering with the UNDP helped a long way. But we have seen that even with that intervention, there has not been any much improvement in the economic development, especially from the contribution of aid. And that is why, as a government, we have taken a look at it all over again. Like we are just discussing here what everybody has said here. We cannot continue doing like the president of Ghana stated. We cannot continue doing the same old things and expect different results. I think the transition that we have to take is moving away from an aid-driven economy into having more private sector participation in economic development. And that is what we have to keep in mind. And one of the things that we have to always focus on is looking at what reforms governments can make so that we have more internal trade going on and domestic investments flowing. We cannot continue thinking that there's going to be private sector capital flowing into our economies if we continue to work with the same laws. Our laws are quite restrictive. And like the banks are saying, until we start looking at what we need to do to simplify some of the regulations, we need to do a lot of deregulation to permit the private sector have confidence in what the governments are offering and see how they can also feel comfortable to actually put their money into what is required, especially in terms of like infrastructural development, which we need a lot in Africa. If you take, for instance, what we need to do, we all understand that the only way we can drive industrialization in Africa is when we're able to do enough investment in energy transport. But if we depend on the usual financing models, we know it's not really going to make any much difference. Everybody has talked about the financing gap in infrastructural development projects. So if we really want internal capital flow, especially from our domestic private sector, then we have to start looking at those innovative ways, those reforms that can actually help to create the kind of enabling environment for them to thrive. Always focusing on revenue generation, which is what most African countries, because we have obligations to pay salaries, to meet some of the social needs. But if we continue paying so much focus on just revenue generation and forget about the goodies which economic of scale can have, open up the environment for more private investment, then I think we're going to miss it clearly. Thank you.
Thank you so much. Unfortunately, we have run out of time. Thank you so much to our esteemed panel for all your insights. I hope everyone was able to walk away with some useful information that they can take home and apply and seek out that finance, because clearly it's available. I'd like to give a big thank you to our panel.
Thank you so much, everyone. I'm just going to make a quick an arrangement about lunch. I think you should have been given some vouchers. The ushers are going round. I hope you have. So lunch will be served in 2 restaurants. There's a restaurant